Hello everyone, I am Gwen Preston. I'm the Vice President of Communications for West Red Lake Gold Mines, and I'm here to try and give you an in-depth presentation of the company, try and answer all the questions that may crop up as I go through this story. I'll try and think of them as I go and try and answer them. I do certainly make forward-looking statements when I'm presenting this story, and those are the disclaimers of those statements. Okay, so West Red Lake Gold Mine, this story, this investment idea certainly starts with why we started the company. And we started the company 2.5-3 years ago based on exactly what you're seeing in front of you right now. What you're seeing right now is evidence of how already in this gold bull market, we're seeing a pattern that we see reliably in gold bull markets. And that pattern is that the companies that are offering up are generating new gold production outperform the rest of the gold equities in gold bull markets. And so that can be turning on a first mine, so new gold production, or it can be turning on or expanding existing mines, so growing gold production. Here you can see that producers with organic growth, so growing, new producers, or those that are heading towards one of those categories, developers who are being re-rated, are already outperforming the GDX and the GDXJ, so those indices of major gold miners, like quite notably in this gold bull market. Now, West Red Lake Gold is the red line on this chart, and that's because we just entered this category. We turned on our first mine only 2 months ago, 2.5 months ago, so we are a brand new entrant into this group, and that's a rare thing. Gold equities, the gold stock market, has gone through a pretty dark time over the last decade. Investors were totally understandably interested in other spaces, in tech and in other things. And they weren't interested in gold equities. And so a lot of gold projects, because of a lack of investor interest, didn't make progress. That means that now we have a gold bull market. Investors are interested in gold stocks, but there are very few new gold mines being put into production. So West Red Lake was founded a few years ago on exactly that premise. The idea that projects had stopped in their tracks, and the understanding that that would mean that when the expected gold bull market did get underway, there wouldn't be very many options in this new and growing gold miner category for investors to buy. All of the investors who understand that this is a great way to get leverage in a gold bull market. And so we set out to create an opportunity in this group. And we were able to do that. We were able to put that vision into action a few months ago when we put our Madsen gold mine into production. This next slide just takes that logic one step farther, which is to say shows you how gold miners are valued in the market. And gold miners who are putting out below about 100,000 ounces of gold a year, they get a particular multiple on their production. They get valued at a particular multiple, and it's not a high. It's a good multiple, but it's not as strong as it is for those who are producing over 200,000 ounces of gold a year. And so West Red Lake Gold wants to offer new gold production to investors. And then in the course of this gold bull market, we want to chart a path, show that we are heading to become a mid-tier gold miner, a producer of scale, so that we can offer our investors this ride, this multiplication of value by amplifying our production during the gold bull market. This is why we're here. This was the foundation of the company. And the Madsen Mine is the mine that we acquired as the first way to do that. So the Madsen Mine is in an area called Red Lake. It's on the western edge of Ontario, so it puts it almost right in the middle of Canada. The Madsen Mine, Red Lake, is a place that's produced gold for the last 100 years from a series of very high-grade deposits. The Madsen Mine contributed to that production. So from the 30s, 40s, 50s, 60s, it produced 2 million ounces of gold from 10 gram per ton average grade coming out of the mine. So a really nice operation. Then it was quiet for a whole bunch of years while the gold price was also quiet. There was a few kicks at the can, but the next kick that really mattered was a company called Pure Gold. Pure Gold in 2014 recognized the opportunity to find additional mineralization, or to just quantify the additional mineralization that was in and around the old mine. And then they had the vision to know that the market could likely get pretty excited about the idea of a new high-grade gold mine in this famous gold area of Canada called Red Lake. Pure Gold did a lot of very good work. They did 180 kilometers of drilling to define the deposit that we're still working with today, which has 1.7 million indicated ounces. That's the medium level of confidence, at an average grade of 7.4 grams per ton, plus another not quite 400,000 ounces of inferred, the lower category of confidence. Really nice high-grade deposit in and around the old mine. Pure Gold then did the whole thing. They permitted that. They engineered it. They built the mine. They built a very good mill. And they put the Madsen Mine into production. Unfortunately, that group of people lacked experience in specifically that, in building and operating mines, in particular, narrow vein, high grade underground gold mines. And so that lack of experience means that they cut some corners. Unfortunately, the corners that they cut meant that the mine went bankrupt after 14 months of commercial operations. So big, a sad event for sure for Pure Gold shareholders. Did open up an opportunity, of course, for West Red Lake, because we were out there looking for a mine that we could put into production quickly. That's a rare thing. Permits on their own often take, 10 years. Maybe it's a slight exaggeration, but a whole bunch of years to permit a mine to get it into production. So we were looking for one that we could put into production quickly, and where there was value that we could unlock for our investors by applying our operational expertise and access to capital. So Madsen was a perfect fit for us. We bought it just over 2 years ago. And then we spent 2 years doing all the things that we realized were necessary to fix the corners that were cut and to put this thing into production in a robust and sustainable way. And by the time we got to the spring of this year, we were doing a test mining program that produced a bulk sample. We tested that bulk sample to see if our approach to this mine worked. It did, and so we started the mine up in May of this year. Now we're in the ramp up phase. So we're going from, we're getting our feet under us, we're increasing the amount we're pulling out of the mine, we're adding more trucks, we're getting this thing up to speed with the goal of getting ourselves to commercial production at sometime in the next few months. And then from 2026 onwards, our goal is to produce at Madsen the way that we said we were going to produce, to add value to Madsen, ideally to chart a path to turning this mine into more than we've promised out the gate. And we have some ideas for how to do that for sure. And then at some point, we certainly intend to acquire another mine and repeat the whole process again, using our special skill set, which is operational expertise, to do this again. All based on the knowledge that new and growing gold miners outperform all other gold equities in gold bull markets, and there's hardly any in that category this year. So we're very, very motivated to be an option in that category for our shareholders. So that's the basis here. There's a lot of detail to flesh out what I've just said. And of course, that detail starts with what went wrong last time, right? You bought a mine that went down in flames less than 3 years ago. And so certainly since the acquisition, we have rightfully spent a lot of time talking to everyone about what went wrong last time and what are we doing differently. That is the fundamental premise of this story, right? When we looked at the Madsen Mine, we recognized that there were two categories of errors that had manifested there. There was an error in in the technical approach to mining, how they understood the deposit and how they mined it. And then there were errors in how they built the operation, or what they didn't build at the operation is perhaps a better way of saying that. And by addressing those two baskets of errors, that's how we've gotten ourselves to a place where we are confident that we can operate Madsen successfully. to addressing those has meant, I actually have 90,000 meters here. I haven't updated the slide apparently in a couple months. We're at more like 140,000 meters of drilling that we have slammed into this deposit since acquiring it. Those meters are all about making sure that we understand exactly where the gold is. And that's fundamental to operating a successful high-grade narrow vein underground gold mine. And then we tested whether that approach was working with a bulk sample. So that was sort of the key to the technical side of the remedy. And then on the infrastructure side, I would suggest that the prior operator, in quite a few instances, punted projects down the road. They said, okay, that's a good project to do, but we'll wait until we're in production. We'll wait until we have cash flow, then we'll do that project. They were always trying to build the mine on as tight a budget as possible. They wanted to take on less debt, an understandable motivation. Unfortunately, punting projects down the road meant that the mine that they built was an inefficient operation. So their lack of understanding of exactly where the gold was meant that they delivered low-grade mineralization to the mill instead of high-grade. And then they're not doing quite a few infrastructure projects meant that their costs were way higher than they expected. So the gold coming into the mill was way lower and the costs were way higher. That's the real reason why the mine didn't work. And we have an answer to the technical, and then these are some of the capital projects that we did to address the infrastructure side. And I'll get into those in a bit more detail. We also just spent a lot of time developing the readiness to run the kind of complex machine that an underground mine is. And fundamental to that is hiring and training over 200 people to make sure that that you have the expertise and the manpower to get it done. Plus a host of other things, from a pre-feasibility study to a strong safety culture and onwards. So I've already talked about this a bit, but let me dive for one moment into a bit more detail into why we're doing so much definition drilling and why that matters so much. When I say that the prior operator delivered low-grade material to the mill instead of high-grade, the reason that happened is, if you can believe it, it looks like finger painting, but it actually is demonstrated in those images on the left of your screen. So the purple ribbon this is just one small part of the deposit. The purple ribbon is the resource envelope. So the deposit model says that the gold is within that purple ribbon. Pure Gold went ahead and engineered a mine to mine the purple ribbon. The problem is that the gold at Madsen, the gold in Red Lake in general, is really high grade, and there's a lot of it, it's pervasive, but it is not continuous. Which is to say that the gold is not evenly spread throughout that purple ribbon. Instead, it's in pockets. It's in a lens here and a lens there, and then there's areas in between that have no gold at all. And if you don't do enough drilling to understand precisely where the gold is, you end up mining a lot of material that is not mineralized. And so a lot of drilling is 7-meter spaced drill holes. The rule of thumb in Red Lake, where they have, just this summer we celebrated 100 years of mining in Red Lake. There's been 30 million ounces of gold pulled from the rocks of Red Lake. The rule of thumb in Red Lake is 7-meter spacing. That's how tight together your drill holes have to be into an area of mineralization before you're ready to mine it and have confidence that you're going to be able to mine it effectively. Pure Gold, for comparison here, they mined that purple ribbon when the drill holes were still 20 meters apart. So if you think about that sort of in 3 dimensions, you can imagine how much less data they had around where the gold was than arguably they should have had. And so our approach has been to tighten up the drill hole spacing to 7 meters before we do our final mine design and then go ahead and mine it. And when you do that, you move down those 3 images, and the one at the bottom shows that the gold is where the red blobs are. It's not evenly spread along the purple ribbon. The purple ribbon is a guide to where it is, but it's an okay guide. You need to define the lenses, and then you need to mine the lenses. So they just were not sufficiently mining the right rocks. Tightening up the drill hole spacing is essential to develop an in-house resource model that is accurate and sufficiently high resolution that you're mining the right rocks. that's the basis of our technical approach. And then we tested that technical approach, like I said, with a test mining bulk sample program. What we did here was mine in 3 different parts of the deposit. We mined about 15,000 tons. This happened in the spring. And the goal here was to compare what our model said we were going to get from those stopes, those areas of mining, with what we actually got when we pulled the rock from those areas. The goal was for those to match up, and as the numbers in the green box there show, they matched up as well, as closely as we could have ever wanted them to. So this validated our entire approach to the Madsen Mine. The fact that we could reconcile our expected and actual through a test mining and bulk sample program was the final check mark that we needed technically to put the mine back into production. So that was a really significant event that happened in May, was the results of that bulk sample. So that's the technical side. On the infrastructure side, here's a list of the main capital projects that we did to set the mine up for efficient operations. And as I already said, the lack of these projects meant that the mine was not set up for efficient operations, and that led to a high cost structure for the prior operator. And so these are, people, when we first bought the asset, wanted us to put it into production more quickly than we did. But we weren't interested in putting the mine into production until we knew that we could mine and move material efficiently. Because the 2 things that you need to really simplify it in mining are to mine the right rocks and then to move that material, move and process that material efficiently. So these are the projects that we did, from a new primary crusher to 19. Well, it's probably over 20 pieces of major underground equipment now. We needed to dewater the mine. We needed to do all kinds of underground development, which is to say tunnels to access the areas where we're going to mine. We built an on-site camp, and then we did that green line, which is a tunnel that we call our connection drift or our underground highway. That means that we can use the modern, big east portal that's right beside the mill. That prior operator built that portal, but then abandoned it because they didn't want to put the money in to developing the green line. They took their ore out of the west portal. It was a really inefficient setup because it's small and there's public roads and there's a town. And it's a twisty, turny set of ramps. We built an underground highway so that we can move material efficiently. So this is a big part of what we spent those 2 years doing, and we're quite happy with the mine setup that we have now. Okay, so we turned the mine on in the middle of May, and we are now in ramp up. Well, what is ramp up? Ramp up is where you go from turning the mine on to operational stability. And operational stability is we expect to declare commercial production when we have Madsen running the way that we expect Madsen to continue running. So that means you have all of your equipment in place, you have your mine producing its expected tonnage. Because of your equipment and tonnage balance, then your costs are coming in where you expected them to be. That's the process that we're in right now. In general, in ramp up, your crews, your personnel are getting more up to speed, you're adding equipment, and therefore you're increasing output. And so in general, your costs are coming down, your output is coming up. That's the goal of ramp up. And then when you get to your goal of operational stability, everything that you wanted to have in place, then you're like, okay, let's do this. So far, ramp up is going nicely. We have, to the end of July, we've produced close to 10,000 ounces of gold and sold that certainly right away into market, which is a really nice that we're in cash flow right now. And we continue this process. We expect to continue giving monthly updates on ramp up. Really importantly, ramp up is especially valid and especially important for West Red Lake for investors compared to perhaps other mines that are starting up. And this is the reason why. So many watching this have likely seen this curve before. It's called the Lassonde curve. It captures how the value of a project changes as a project goes from discovery. You turn, moose pasture into a gold deposit. You create a lot of value. It's very exciting. You continue that ramp up in value, the first ascent of the curve here, until you get to sort of where the rubber meets the road, which is to say the big chunk of work that is engineering and defining the deposit to a sufficient accuracy that you can engineer the mine and then permit the mine, and you fund all of that, and then you raise capital to actually build the mine. And that's a long, slow, expensive process. And so the value of the project actually erodes during that process. But then you get visibility to production. Usually a company will say, okay, we're going to start building this mine, and the market starts to look ahead to where an asset is producing gold or copper or silver, whatever it might be, and therefore in cash flow instead of in cash need. And that usually then the value of the project starts to ramp higher again. That's the classic Lassonde curve. At Madsen, there's nothing particularly classic about Madsen's trajectory, right? It was a historic operator. It was quiet for ages. Then it was put back into production. Then it was a spectacular failure less than 3 years ago. Then we bought the project. And so I suggest that you could repurpose the Lassonde curve, where the first ascent here is the prior operators start and fail. Certainly they got a lot of value. They got a lot of excitement in the market as they got the Madsen Mine into commercial production back in 2019, 2020. And then, of course, all of that value disappeared as the project went bankrupt. Then we bought the asset, and we went out there and told everyone that we were going to put this mine back into production. And we had lots of reasons why we were going to be able to put this mine into production successfully. We had rationale for that. But absolutely, understandably, the market needed evidence. The market wanted proof that our approach was going to work. And so we suggest that any re-rate for West Red Lake Gold as the operator of a successful Madsen mine was always going to wait until we were able to offer evidence of our ability to unlock Madsen. That evidence started with the bulk sample, when we showed that reconciliation between what we expected that we would get and what we actually got. That was our first opportunity to provide evidence. And now as we go through ramp up and provide these monthly updates of how it's going at the mine site, that's our ongoing opportunity to provide evidence that we're unlocking this asset. And so that should mean that this re-rate is underway right now. Which, of course, then begs the question, well, what is the value of this mine as the market starts to value it as a successful new high-grade gold mine with growth potential? So let me walk you through that question and answer right now. So the market valuing a company is almost always going to start with the official net asset value, right? And the net asset value for the Madsen mine comes from our pre-feasibility study. That's our official mine plan out of the market. We put that out in January, and it gives Madsen Mine an almost $500 million asset value, net present value, and says that we'll produce over $90 million in average annual free cash flow over the life of mine. It's a relatively short mine life, but that's the base case value of the Madsen Mine. But you may have sensed that there was a but coming in how I phrased all of that. I really do believe that the pre-feasibility study is only a base case for that valuation. Even just the pre-feasibility study leaves nice upside available on the table. And that's what's on the left side of this slide. So, like I say, the NPV is $500 million almost. Developers are usually valued at about 0.4 times, but producers valued at 0.7 to 1 times the value of their asset. So arguably, West Red Lake should move towards that kind of valuation as the market decides that we do operate a successful gold mine. So that's one way of looking ahead at value. Another way would be based on average annual free cash flow. Producers often trade at 6 to 8 times their average annual free cash flow. For context here, our current market cap is about $300 million. So just based on the official mine plan, that's an investment thesis right there. But I suggest that net asset value, that value against which those multiples are being applied, should There's reason to believe that that's considerably higher than our pre-feasibility study outlines. And there's a very specific reason for that. The pre-feasibility study, we started in the middle of 2024, and it's a regulated kind of study that requires the use of a 3-year trailing gold price in its mine design. So it used a gold price of less than $1,700 an ounce in deciding what parts of our 1.7 million ounces of indicated gold were in consideration for the mine plan, made it over the economic viability hurdle, and therefore were considered for the mine plan. The result of that low gold price is that it created a mine plan that just took the highest grade bits out of the deposit and left the rest of it behind. That meant fairly small mining areas, quite a bit of development, tunneling to get between those mining areas, and not a long mine life because you leave a lot of the deposit behind. However, no company really mines based on their pre-feasibility study. You always do that or a feasibility study, and then you do the next phase of work. For us, of course, that's the drilling that tightens our drill hole spacing from 20 meters to 7 meters. When we do that, we almost always find more high grade. 20-meter spaced holes in Red Lake often miss lenses of mineralization that are in betwixt. And when we tighten up the drill hole spacing, we often find them. So we tighten up our drill hole spacing. We usually see a bit more high grade, sometimes a lot more high grade as we do that. And then we do final mine design. And when we do final mine design, we are certainly not using a gold price of less than $1,700. We're using the long-term consensus gold price, which is round about $2,350 US per ounce. When you do that, when you design the Madsen mine based on a reasonable gold price and finding more high grade before you do it, you end up with a mine plan that has much bigger stopes, often clustered together, all together tapping more of the deposit than was ever in that initial mine plan, and where the grade in places can be nicely enhanced by infill drilling. This is the way that I can illustrate that a bit. So the images on the left are what the mine design looked like before we did the definition drilling and then the final mine design at a reasonable gold price. The images on the right are what they look like after. And you can see that the mining areas, the stopes, are much bigger. So we have more tonnage, we have more tonnage, more ounces, and a more efficient mine. This really matters because what we're trying to do is talk about, well, what's the value of this mine? Well, these changes show you that this mine is tapping more of the deposit and is doing it in a more efficient way. Those really matter for the value of an asset. I'm just throwing this in because I said in words that we often find more high-grade mineralization when we do that definition drilling. These are some of the really high-grade hits that we've had in our definition drilling just in the last 6 months. So these are all intercepts from tightening up drill hole spacing. So into the resource between other drill holes, previous drill holes. And they're just a reminder that Red Lake, sure, it takes a lot of drilling to define the deposit sufficiently, but my goodness, can it ever be worth the effort? There is some really nice mineralization at this deposit, and these are grades that would stand out on almost any list of gold drilling intercepts globally. So it's very gratifying to us when we get these intercepts. Okay, I'm almost there. So we're trying to figure out what Madsen is potentially worth if and as the market starts to re-rate it as a successful new gold mine. We start with the PFS, which is our base case value proposition. We add on the value of how the mine is actually operating, the benefits relative to the PFS. That's the big box there. Then there's 3 more considerations that I'm going to throw at you. 2 of them are deposits that we already have that are not currently in that mine plan. And then the last one is the opportunity to find more. So for the 2 deposits that we already have that are not yet in the mine plan, One of those is Rowan. So Rowan is our other project. As the map in the top right there shows, Madsen is the project that's lower, and then Rowan is a project that's just to the northwest. It's about 80 kilometers by road because you have to go up and around the end of Red Lake to get there, but there is a road for sure. It's a highway. And Rowan has a small but really high grade deposit. And almost as important as the grade is the fact that Rowan is a deposit that's designed to be mined. It is almost vertical. It starts at surface. It's relatively wide, and the gold is pretty continuous within the deposit. Those are the characteristics that any mining engineer will tell you they like to see when they're designing an underground mine. So just about a month ago, we actually published an initial mine plan for Rowan. What would it look like to develop an underground mine at Rowan? And just based on the deposit as it is, and I'll note right away that we haven't done any work to try and expand this deposit yet. We see very good potential to expand this deposit, but we haven't had a chance to do those drill holes yet. But just based on the deposit as is, a mine at Rowan for 5 years could generate over 35,000 ounces of gold annually, would only cost $70 million to build, and would generate a 42% after-tax internal rate of return. So when you're looking at what West Red Lake is worth as the market gives us credit as a mining company, Rowan, we would expect to be able to have Rowan permitted and groundbreaking at Rowan in just over 2 years, late 2027, early 2028. That's our vision right now. That's a significant addition to a production profile in the Red Lake region. So that's an important consideration that the market isn't giving us, isn't really glommed onto yet. And then there's the Fork deposit, which is truly right beside Madsen. I mean, the Madsen Mine exists where the words are under Fork deposit. And so Madsen's here, Fork is right beside it. Fork has been known for a long time, but the prior operator and us initially, we ignored it because it was a lower grade body of mineralization, only 5.2 grams. In other places in the world, people would drool over 5.2 grams, but in Red Lake, that was considered not the cream of the crop. We took another look at that deposit, recognized a high grade core to it, and are now ready when we have just a bit more cash flow and capacity on site to do a surface drill program from there so that we can really refine the core of that deposit. But we expect that it has sort of like 2/3 of a year's worth of Madsen output just in the core of this deposit that's not yet included. So, adds to the mine life, adds to the production profile if we do this, and also is a really nice option to have in hand because this is a deposit that's almost at surface. It's very shallow. It's only 250 meters away from existing mine workings. So that's only about a 6-week project to blast 250 meters of tunnel over and get access to this thing. So really nice to have a chunk of nicely mineralized ounces sitting close to workings at surface that's not even considered in the mine plan right now. Certainly a consideration when you're thinking about the value of the Madsen project. Now, in terms of what else we might find, I will keep myself limited here. There's all kinds of places that we are very excited to look for additional mineralization. The red blobs in the upper image are a bunch of the areas that we're testing as we go. That we always have 2 drills turning at Madsen. It takes about 1.5 of those drills in a year to keep up with the definition drilling to continue to feed the mine plan. So that means that we have about half a drill over the course of a year, roving around, testing targets where we see the opportunity to grow the resource, to discover a new pocket of resource, or maybe where we see potential for the resource to be significantly higher grade than is currently understood. Lots of opportunity in there. And then in terms of regional targets, before I move on to regional, I want to note that there hasn't been real exploration work at Madsen from inside the deposit since the 1960s, right? The best way to find mineralization in an underground deposit is to drill from underground. You get way better angles, you have way better access, the holes are shorter, you can target better. Nobody's done that until now, since the 1960s. So that sort of underlines why we see so much potential to find new mineralization. The Red Lake mine down the road has been operating for 70 years. A good number of those 70 years have been very good years, and that's usually because they kept finding pockets of exceptional mineralization in and around that deposit. That's the deposit that turned Goldcorp into Goldcorp. We are seeing one of those areas right now at South Austin, where we're delineating a pocket of mineralization that does have exceptional grade. We're going to be mining that area starting at the end of this year, so it's very near-term value. And we see lots of opportunity to find similar such pockets at other targets in and around the mine. So we're really excited about what more we can find at Madsen. When we go take a step back and look at the bigger property, the only target that I'll mention is North Shore. It's about 1 kilometer to the northeast along trend. We drilled it actually in the middle of 2024. We pulled some rock that looked like Madsen. Only had sniffs of gold is the best way to describe it. At the same time, we were running a soil sampling program. That soil sampling program highlighted a target that was shifted just about 200 meters west of where we had done our drilling. And that new target slightly to the west puts it right on top of where the rocks are a boundary, an interface between the volcanics and an ultramafic unit. All you need to know about that is that the interface between volcanics and ultramafics is the classic host for high-grade mineralization in Red Lake. So we're very keen to get back up to North Shore and drill just a little bit west of where we drilled last year to see if that Madsen-looking rock that we pulled is related to a mineralized system, and we were just sort of on the edge of it instead of right into it. We have already made a new discovery outside of the Madsen Mine, which is the Upper 8. When I talk about ultramafic units are interspersed into the rocks of Red Lake. They, in and of themselves, can host some phenomenal mineralization. We have some of that at the Madsen Mine down in the 8 zone. That's right near the bottom of the deposit. It's in this other rock type, and it's 20 gram per ton material, our 8 zone. We're very keen and we see good opportunity to expand the 8 zone to depth, but we're not going to be able to test that or let alone mine it for quite a few years. It's deep. That's just the nature of a deep part of your mine plan. So then the team was like, well, why don't we look closer to surface? Let's look up instead of down. So they identified where a structure crossed that rock unit up dip towards surface. The structure was at the same angle as the 8 zone. They drill tested it and they discovered Upper 8. It's a brand new discovery. It has 17 holes into it. 15 of them returned gold. It's a high grade shoot at this point that requires more work, but it absolutely is a testament to the prospectivity of the Madsen property as a whole. So that brings us back to our staircase. All of these steps are real value considerations when you're trying to determine where the market could potentially take West Red Lake Gold as we continue to give it reason to value us as an effective gold miner, which is the direction that we are certainly pushing to go. This is the team doing the work. I'll just mention a few people, certainly starting with Shane Williams. He's our president and CEO. He's built mines all around the world for 25 years. He spent a bunch of years with El Dorado Gold, being on the leadership teams for their mine builds in Turkey and in Greece, and then in Quebec at the Lamaque mine, so a very experienced mine builder. And he very pointedly built a team, a management team, that knows how to build and operate mines. And so that's truly our unique strength. It's not super common in the world of junior mining to have that skill set. And so that's the skill set that we plan to deploy to create value. We want that new and growing gold producer value, and we believe that we've built the team to be able to do that. This is our share structure. We bought the Madsen Mine for a modest sum. Then we raised money over the last 2 years to do all of the work that was needed to successfully put this thing back into production. As a result, we now have getting on for 350 million shares out. We do have warrants. A lot of them trade. It's another angle into the story. We have very good liquidity. When I talk about the warrants, one important component of that is that we've worked really hard. We did a lot of financings to raise the money to build the Madsen Mine. But at the same time, we worked incredibly hard to build the liquidity so that we could trade through the trading that's the result of doing all those financings. And so compared to a group of our peers there, we trade 1 to 4 million shares a day. We're very proud of that. So for big funds that want to get in and out, they absolutely can do that. It's not an impediment to them coming in and joining our share registry. And just to go back to this warrant table, I will note that we do have 43 million warrants exercisable at $1 that expire in May of next year. We're trading at, I think, as we speak right now, 93 cents. So we're right, we're getting pretty close to that $1 line. Obviously, warrant exercises create dilution, and so that's a reality that dilutes existing shareholders. But also, should we get above $1 and get exercise of some good portion of those 43 million $1 warrants, there's a lot that this team could do. There's a lot of value that we could create with the proceeds from 43 million $1 warrants being exercised. So that is an important consideration when you're looking at the warrants. We want to build a mid-tier gold mining company. It takes vision and capital to do that, and that's what we've done so far. We've developed, we've taken Madsen as far as we have because we've pushed very hard to get it done as quickly as we could while ensuring that we did everything that we needed to do along the way. And we're very keen to now demonstrate that Madsen works, chart a path to growth at Madsen in the Red Lake District for West Red Lake Gold, and then ideally repeat that feat with another asset if and when we might be able to find such a transaction. So that's the story. Again, I'm Gwen. If you have any questions, please reach out, and I hope I can answer any of those questions that you might have.